in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday. Conflicting details. The U.S.-EU deal reveals some discrepancies. Talks between the U.S. and China are up next. A chips pact. Samsung will make AI semiconductors for Tesla in a deal worth more than $16 billion. And all of that ahead of a busy week with tech earnings, the Fed decision, jobs data, and a tariff deadline. We are certainly going to have some fun this week. And last week, 5 straight days where every single day we hit a new record high. Can we make it 6 this morning? We're up by 1/3% for the S&P 500 futures session. NASDAQ goes up 0.5%. We have a new street high, by the way, for year-end targets. That comes from John Stolfus over at Oppenheimer. 7,100 is where he pins it. He says all the tariff-related hurdles, they have been overcome. Now, with those trade deals with the EU, China's coming up next. We've seen stocks rally and the curve flattening. A rally continues with some pace in the bond market this morning. We're up by about a basis point across the curve. You can see the gains are being led by the long end, so that curve flattening continues today. Your 10-year trading at 437. Let's get you some stocks on the move this morning. With that is Valerie Teitel. Hey, Val.
Hey, good morning, Danny. Let's start there with Tesla on the back of this announcement of a deal with Samsung worth $17 billion to produce chips for Tesla vehicles. It seems like Tesla investors are liking this tie-up. The shares are up 2% so far in pre-market trade. Next, let's move on to Europe, because there has been quite a sizable reaction when it comes to the U.S.-EU trade deal that was announced yesterday. It seems like chip stocks weren't expected to be included in this 15% tariff rate, so we're seeing the likes of BE Semiconductor, ASML, ASM. All 3 of these stocks, Danny, are the best performing stocks in Europe this morning, liking this enthusiasm around the trade deal. Lastly, let's end in the pharmaceutical space. This over in the U.S. Sarepta is down some 3% in pre-market trade as the FDA is probing the death of a boy related to their groundbreaking gene therapy drug. Sarepta, as a stock, is down some 90% so far this year with complications around the drug's rollout. Danny.
Valerie, thank you very much for that. We'll catch up with you later this hour. And this hour, we're going to push ahead to the very busy week with Goldman's Christian Mueller-Glissmann and take a closer look into the earnings season with RBC's Lori Calvasina. Plus, don't miss our conversation with the Pony.ai CFO, Leo Haojun Wang, on the future of robotaxis. But first, our top story this morning, a historic deal between the U.S. and EU.
So I just want to congratulate you. I think it's great that we made a deal today instead of playing games and maybe not making a deal at all. I think it's, I'm going to let you say, but I think it's the biggest deal ever made.
And our team coverage starts right now. Bloomberg's Oliver Crook is live in Stockholm and Lizzie Burden in Scotland. Lizzie, you're in Scotland where this agreement between the U.S. and EU was achieved. What are the details?
Danny, we're at Turnberry, which is one of Donald Trump's golf courses here in his motherland of Scotland. And Ursula von der Leyen, the European Commission president, stopped by herself yesterday afternoon to get this US-EU deal over the line. It agrees a 15% US tariff on most EU goods, so a trade war has been averted. That is why you're seeing the relief in some of the European equities, not so much perhaps for euro dollar, because this favours the US. And indeed, Ursula von der Leyen admitted that the need was there to redress the imbalance in US-EU trade. The EU is going to pay higher tariffs. And Danny, you pointed out that there was a bit of a disparity between the readouts from Trump and von der Leyen. Trump thought that he would be paying no tariffs on US goods going to the EU. Von der Leyen says that's only for certain goods. For example, certain agricultural products, certain chemicals. And if you want to have zero tariffs, we want them too, she says. So they're going to have to work on that list and look to grow it. But how did she get it over the line? Well, of course, there had to be a sweetener to get Donald Trump to close the deal. She's agreed that the EU is going to spend $750 billion when it comes to American energy, $600 billion when it comes to investing in the US. They're going to put vast amounts of money into US military equipment. But to get this deal really over the line, to get that hole in one, they're going to have to get the EU member states agreement as well. So there's still uncertainty here. It could yet all fall apart.
And meanwhile, Oliver, the next big hurdle for us to overcome happens in Stockholm, where you are, where U.S. and Chinese officials will be meeting. Oliver, what's the outlook look like for a deal between those two nations?
Yeah, so we're waiting for Scott Bessent here, the U.S. Treasury Secretary. He's expected to arrive in a couple hours here at where the ordinarily is occupied by the Prime Minister of Sweden and his cabinet, making it available for those trade negotiations between Scott Bessent and the Vice Premier of China, who will be arriving the next couple of hours, really trying to lay the groundwork for what we got out of the EU yesterday, which is a framework for a comprehensive deal between China and the United States. Needless to say, that is a slightly more complicated thing to negotiate than it is with the EU. So what we're expecting today, reminding everybody where we are on tariffs between China and the United States. We are down from those 125% tariffs that we saw in the trade war that began with China and the United States. We're down from the U.S. side to 30%. But that truce expires on August the 12th, and that is what the Treasury Secretary and the Vice Premier of China are here to discuss, to try to get another extension on that, potentially another 90 days, but also to discuss some of the underlying issues that will pave the way for a framework. Part of that is, for example, crude oil and fossil fuel purchases from China, by China from Russia and Iran. There's a question of U.S. agriculture getting access to the Chinese market. There is, of course, the panoply of other issues like TikTok, the sale of TikTok. Trump says that there is a buyer in the United States. You still need sign-off from China. So a vast array of different issues that are going to be discussed here in anticipation of potentially further down the line. As you have to imagine, if there's going to be a trade deal signed between China and the United States, you have to imagine Donald Trump will want to front that next to Xi Jinping. And we know that Xi Jinping has invited Donald Trump about a month ago to come to China at some point with the First Lady. So this is really the sort of laying the groundwork for those discussions and extending the runway slightly on the trade truce that has been struck between China and the United States.
Hey, Oliver, Lizzie, excellent reporting this morning. Looking forward to your coverage throughout the week. That's Bloomberg's Oliver Crook and Lizzie Burden. And it is an eventful week ahead. We also have Meta and Microsoft earnings and a Fed decision on Wednesday. Thursday, we get even more earnings, Amazon and Apple. And then we're going to be wrapping up the week with the jobs report and President Trump's tariff deadline on August 1st. So you could argue, is it as important of a deadline with these deals being inked? Joining us now to help set up the week is Christian Mueller-Glissmann, head of asset allocation research at Goldman Sachs. Christian, for you, what is the big risk this week with just such a heavy calendar?
Yeah, no, I mean, listen, I think having the deal now over the weekend definitely reduces the trade policy uncertainty risk. I think we are in the middle of this Goldilocks regime. I think things are looking a bit more frothy. There's a lot of bullish sentiment that has built up. And there were three drivers. You had like trade policy uncertainty coming down, and that has continued. You've had inflation momentum being negative, and to some extent central bank talk being more dovish. And that will be the big question this week. We had the ECB already sounding a bit more hawkish last week. The question is the Fed this week. Will we actually get a bit more dovish talk than in previous meetings or not? That could be something. And rates could easily move quite a bit on that positive growth news. So rate shock risk is probably quite high. And I think the last thing that has supported the Goldilocks backdrop is resilient hard data. And that also includes earnings. So I think we need to see if these tech names are delivering. And if they're not, I think markets are certainly not priced for that. I think like implied volatility, implied correlation are all very low, indicating the market doesn't expect any major negative surprises.
Well, on that note, Christian, because you've been warning, at least since the start of this month, that there is volatility on the way, and we haven't seen that. In fact, you've had an S&P that's moved less than 1% for the past 23 trading sessions, something it hasn't done since October of last year. What do you make of that lack of volatility and the potential for it to change?
Yeah, I mean, this is the interesting thing about these Goldilocks regimes, these kind of low volatility clusters. I think it's not easy to break them. They often overshoot. I think our team in the US, they've just done some work on retail trading, and they find that a lot of the indicators they're tracking, like trading in unprofitable stocks, penny stocks, and kind of like options trading, SPACs, IPO performance, a lot of these things are pointing towards froth. They're pointing towards this Goldilocks cluster potentially going a bit too far, and that increases latent risk. But you're absolutely right. Unless there is a major shock that snaps us out of this regime, I think you can linger a bit longer in it. The VIX is continuing to reset, and it was because of the uncertainty probably a bit higher than what you normally get in Goldilocks regimes. So there's a bit of compression in vol and risk premia that you can still see. But I would still say the hurdle rate to disappoint is coming down a bit, considering how much the market is rallying. It's been one of the strongest equity rallies we've seen in a long time coming out of the Liberation Day trough.
Well, to that point, and Christian, you pointed to, we're going to get a lot of the tech names reporting a lot of capital expenditures. We've already heard last week from Alphabet. That will continue into what we hear from this week from the likes of Microsoft and Amazon. How important is that, not just supporting AI, but the massive spend these companies are doing for utilities, for industrials? What does it mean for growth overall in the U.S.?
Yeah, I mean, there's two things. There's obviously the short-term impact, which is huge. Like you have capex investments, and that supports earnings, supports maybe some industries that didn't have much growth in the last few years. There's a new lease of life given to some value sectors. You mentioned it, like utilities, infrastructure. But I think then there's the big question about ROE, return on equity and profitability. Like a lot of concern exists with regards to, will these investments really translate into the same profitability that these companies currently have? Because in order for them to sustain their valuations, they don't just want to kind of sustain the kind of level of profits. For every dollar that's invested, that dollar needs to deliver the same return on equity or more as before. And that's tougher because these investments, they're not as capital light, they're more capital heavy. So we're all monitoring that, but it's a fair point in terms of sequencing. In the near term, the capex is a positive because it feeds into the economy in a lot of sectors. And I think we'll only learn about the profitability and the impact from this capex on profitability over the medium term. I don't think we'll see a lot of guidance and information on that in this earnings season.
Christian, I think that's such an interesting point. The fact that the business model of these companies is shifting from something that is capital light to something capital intensive. That had been a lot of the valuation justification for these companies. The fact you didn't have issues like you did for industrial stocks. Does that mean that we should look at the valuations and pricing of the big tech players different if they become capital intensive companies, if they look more like infrastructure, industrial type stocks?
Yeah, I mean, I think we've done a lot of work on that, and return on equity explains a huge amount of that valuation premium that these stocks have, and that also to some extent the US has relative to the rest of the world. So if you start to see signs of capital intensity increasing and profitability coming down, I think we'll have to revisit those valuations. And based on our equilibrium fair value model for the S&P, in the last few weeks, you've actually started overshooting what the ROE is right now. So the market is to some extent prepaying a bit for better ROEs going forward. So that could be easily disappointed. The question is when. I'm not sure that these companies will essentially say in the next few quarters, our AI capex is not working and we're really struggling to make money. I think it will take a long time for us to learn if this capex will really drive these profitable kind of like ROEs that we've seen before.
Christian, this has been so fascinating. Unfortunately, we're going to have to end it there. Please come join us again soon. Christian Mueller-Glissmann of Goldman Sachs. Now let's get you some other top stories that are trending on the terminal this morning. Samsung will produce AI chips for Tesla in a new $16.5 billion pact. It will run through the end of 2033. Elon Musk posted on X that the actual output of the deal could be several times higher. The agreement is for an upcoming plant in Taylor, Texas, to produce the chip maker's next generation of AI6 semis. Meanwhile, sales of Heineken beer saw a decline in the last quarter despite the summer heat wave. Beer volumes fell due to retailer disputes across Europe over price increases. Shares of Heineken posted their biggest intraday drop in more than 3 months. And Thai and Cambodian leaders have begun talks in Malaysia to end their deadliest border conflict in more than a decade. The Malaysian Prime Minister is facilitating the dialogue, with Washington and Beijing dispatching envoys. Clashes erupted last week with at least 35 people killed and more than 150,000 civilians displaced. Coming up, our CFO segment on deck with Pony.ai's Haojun Wang on the autonomous vehicle company's global expansion plans. That's coming up next. This is Bloomberg. It is a busy day here in the U.S. Let's just outline your calendar for you again. After 5 record days of hitting new highs in the U.S. for the S&P 500. We're going to have Fed and payrolls. That's Wednesday and Friday. Alongside that, we have a lot of earnings on deck. We're going to have Amazon. We're going to have Apple alongside Microsoft and Meta, not to mention other data sprinkled within their PCE among them and GDP. Off the back of that, we are looking at stocks moving higher this morning in the future session, higher by about 0.5% for the NASDAQ 100. For the S&P 500, it is 0.33%. U.S. yields, meanwhile, the 10-year yield down 1.5 basis points. We've seen a rally in bonds with a new deal coming from the EU and U.S. Up next, it is a meeting between the U.S. and Chinese delegations in Stockholm. Will that be the next thing? We also have the August 1st deadline for trade, but of course that's become maybe irrelevant with all of the various deals that have been achieved. All right, let's shift gears a little bit with our monthly CFO newsletter. And autonomous driving has been a big one here. Pony.ai, it's quickly become one of the leaders in autonomous mobility. Its first quarter Robotaxi revenue tripling. It comes as the Chinese company is aiming for large-scale commercialization later this year. We're hoping to catch up with the CFO later, but joining us for now is Bloomberg senior editor Nina Trentman. And Nina, I know this is a newsletter that you work on quite frequently. I wonder how you see the distinction between the CFOs you've spoken with that are on the forefront of AI, the thing that's powering the economy right now, and other CFOs that are maybe more exposed to things like retail and tariffs. Just how big of a dichotomy are the conversations you're having right now?
Yeah, thanks for having me. It's a huge divergence, as you pointed out. Like in the end, there's very different challenges that companies are facing if you're in tariffs, in tariff-exposed industries versus something as future-leading as AI. Of course, we're seeing AI CFOs or CFOs at tech companies plowing pretty unimaginable amounts of money into this new technology, into capital spending. And on the other hand, we're seeing sort of like older industries, retail, but also industrial production. We're seeing sort of that kind of spending declining a little bit because there's uncertainty around tariffs, there's uncertainty around the global economy. So it's a huge divergence between the different types of CFOs and companies that I'm speaking to. And it's super interesting to see how the CFOs are navigating these challenges at this point in time.
What distinguishes the winners versus the losers at this point, Nina?
I think to some degree, a certain amount of foresight amongst companies. So I think, of course, the tech companies that were early investors in artificial intelligence, we're seeing those early investments really paying off. And then on the other hand, we're seeing also the companies that haven't really been able to benefit to the same degree. If we're looking at, for example, Intel in the US, once sort of like a huge chip maker is struggling now. So I think that is probably the biggest advantage, I would think.
Well, I'm pleased to say that we're going to continue this conversation with one of the companies and CFOs Nina has been speaking with. That is Leo Haojun Wang, Pony.ai CFO, who joins Nina and I now. Leo, thank you so much for joining us. It's a pleasure to have you on. And I know you've recently gotten some of the approval to expand your autonomous driving within some of the Shanghai area. But I would love to get your take at this moment where you see Tesla trying to ramp up their robotaxis, Waymo competing in the U.S., Baidu also in China, the state of competition and where the advantages lay.
Well, the whole industry is accelerating, putting it this way, because more and more people are now seeing robotaxi is coming to the commercialization stage, not only because the vehicle itself becomes more and more mass-produced, but also on the regulation side, all the regulation framework, especially in the US, in China, now allowing us to commercially charge fares to the public. And we also see there are more and more general public accepting robotaxi as a safe new transportation choice for them on the daily commute. So given all these come into place, we do believe this whole industry, the robotaxi, gets more and more attentions. So for Pony.ai, this year, it's our theme of mass production. So that's why we unveiled our Gen 7 vehicle earlier this year in the Shanghai Auto Show. And now 2 of these vehicle models are already being produced, and we are getting the permits for these vehicles. So at the end of the year, we'll see more and more Pony.ai's new vehicles rolling on the street in tier 1 cities in China, and even more in other foreign markets.
Haojun, actually, that's a good point for me to jump in. Just wondering how you're balancing that need for investment for your expansion in China with your global expansion. I know the Middle East, for example, is a focus area for you as a company. So can you talk to us about that?
Yeah, so we do believe this technology should be applicable to many markets. Because given the AI's capability, it should be able to very adaptive to different markets driving capability if your technology is solid enough. So given that, we do see, first of all, right now only the US and China has so-called a full-blown regulation framework, meaning their framework already allowing us to deploy hundreds or even thousands of Robotaxi to commercially charge fares to the public. So this will be probably the most important markets to show what's the commercialization gonna be and what's the largest scale could be. Given that there are also overseas market, they are eager to adopt this new technology, adopt new commercializations. So Middle East can be a very interesting market because the regulator there also want to introduce advanced autonomous driving companies so that they can show that they are very open to these new technologies. That's why we saw all these news about the Middle East could be another hotspot for robotaxis coming along the way. But I think the commercialization, especially in terms of the scale, in terms of the regulation framework, it will be a little bit behind the US and behind China, but it will be accelerating. And I do expect other overseas markets, for example, the Europe and maybe some East Asia countries or Southeast Asia markets will open up and they will follow very soon.
Yeah, just actually wondering, you listed in the US not a long time ago. Now, of course, your finances are more in focus than they were before. I noted that for the first quarter, you reported a net loss, an increase compared to prior quarters. Just wondering, how important is profitability for you as a company at this point in time and at this stage of your development?
I think at this stage, it's very important for us to make the strategic investment. Like I mentioned, this year it's the investment for scaling up for mass production. That's why we spend quite a bit of the R&D expense into our Gen 7 development. I think this is very critical because we look at the Gen 7 vehicles, that will be the vehicle once we deploy it commercially at a certain scale. The unit economic can prove to be positive. So this will be a very critical milestone for us to eventually become the whole company break even. So achieving this milestone is necessary to have some sort of investment. That's why we intensified the R&D investment for this Gen 7 deployment and development.
Hey, Haojun, thank you very much for that conversation. We really appreciate it. An interesting time for that technology. That is Leo Haojun Wang, Pony.ai CFO, alongside Bloomberg's Nina Trentman. And just to say, check out the CFO Briefing newsletter, a really great take from Nina. It's about CFOs. It features top executives at global companies. It also covers key trends in corporate finance. You can read that at Bloomberg.com/CFO Briefing. Coming up on the show, we're going to be speaking with Lori Calvasina as we go through this earnings season. It's a big week for big tech. We'll break down what Lori is looking at in the company reports and how they're coping with tariffs to come and just how bullish she is. That's next on your Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know this Monday. Conflicting details. The U.S.-EU trade deal reveals some discrepancies. Talks between the U.S. and China are up next. A CHIPS Pact, Samsung will make AI semiconductors for Tesla in a deal worth more than $16 billion. All of that ahead of a busy week for tech earnings, a Fed decision, jobs data, and a tariff deadline. So good luck to everyone for this week. You're maybe in the eye of the storm now. S&P 500 and NASDAQ futures go higher after hitting a record every single day last week. Some of the sell side getting excited. John Stolfus at Opco setting a new street high for year-end target at 7,100. Morgan Stanley's Mike Wilson says that his bull case of 7,200 is starting to solidify, but it is agreements over trade that's helping propel this market higher. You also have that helping bonds. With yields lower this morning, we've seen curve flattening all last week. It continues this morning with the long end rallying the most, just slightly. Your 10-year yield down about 1 basis point at 436. Let's get you some stocks on the move this morning. Here with that is Valerie Teitel. Hey, Val.
Good morning, Danny. Let's start with Tesla because it seems like investors are liking this deal with Samsung, a $17 billion deal for Samsung to make the AI chips that will be used in Tesla's robotaxis. And Tesla is in the green, up 1.5% pre-market. Let's move over to pharmaceuticals because the FDA is probing the death of a boy related to Sarepta's groundbreaking gene therapy drug. And we're seeing Sarepta sink in the pre-market, down 2.5%. Now, note, Danny, this stock has fallen over 90% so far this year on this rollout, the complicated rollout of its gene therapy drug. Lastly, let's head over to Europe because it does seem to be that a 15% tariff wasn't priced in to all sectors, especially chips. We have the likes of BE Semiconductor, ASML, ASM, the three best performing stocks in the Eurostock 600 today. Seems like they're very relieved to not be part of the sectoral tariff threat. Danny.
That is certainly true. Valerie, thank you very much for that. Now, Lori Calvasina of RBC Capital Markets is also looking into the impact of tariff uncertainty on companies. She writes many companies are managing through tariffs fairly well, but that it's also far too early to assume tariffs won't generate some upward inflation pressure or other challenges in the economy. Joining us now, I'm pleased to say, is Lori, who's U.S. Equity Strategy Head at RBC Capital Markets. Lori, great to see you. Thanks for joining this morning.
Thanks for having me.
I got to say, just looking through your note, you do seem a lot more measured than some of your sell-side peers who start to dust off their bull case upside scenario playbook. What has you remaining a little bit more conservative right now?
So look, I mean, markets have run up tremendously, and we actually have done this work where we looked back at the market rebound 9 months down the road off of things like the 2010, 2011 growth scares, 2018, kind of all the big 10% plus drops except for the COVID recession of 2020 that we've seen since the GFC. And we are recovering faster than any of them. And we're about where we deserve to be if you look at the average of those in 9 months' time, in December. So we think markets have already pulled forward a tremendous amount of good news. And that's not to say, that we feel super bearish from here. We feel pretty neutral, looking at stocks through the end of the year.
What do you make of the fact we have recovered so quickly? Is it a change in investor behavior? Is something different this time around from previous rebounds?
So I think that what is really unusual is that perhaps far earlier than any point in time that I can remember in my career, people are already looking to next year. And if you go back to June, all I was hearing was 2026, 2026, 2026, we're done with 2025. And as we're getting all these headlines, on the trade deals, I'm sort of, kind of laughing to myself in my head, like, who was worried about these? Certainly not any of the people I was talking to in June, where there was an assumption that, we didn't really know quite what all the details were, but that things, we were going to get deals done, right? There were just not a lot of concerns about tariffs in the meetings, frankly, that I had at the end of the second quarter.
What about what you've heard from companies and how much concern they're expressing in this earnings season?
I don't think that the corporate sentiment level matches what we've seen from investors and what we've seen priced into markets. And, if you want to just sort of take my opinion out of it, look back at the Duke CFO survey, which came out right before reporting season, and we didn't see the same kind of inflection in sentiment that we had seen in things like the NFIB survey, things like the AAII survey, or even the consumer sentiment surveys. If you look at what we've sort of qualitatively been gathering the last couple weeks, we kind of just finished week 2. Week 1 was all about financials, and they sounded pretty good. Our tagline at the end of that was fine but not fabulous. Maybe even they were a little bit more guarded than what we'd been hearing from investors. Last week, though, we finally got both volume and breadth in terms of, different industries and sectors participating, and it frankly did sound a bit more mixed. We have had, even as of last week, obviously not the news of the weekend, but we did have more clarity. And I was still seeing one company after another talking about the fluidity was kind of the big word, uncertainty. And certainly, companies were saying things were better than the initial assumptions, but there was still some guardedness.
Well, then you had some chip companies like NXP, I think, basically said, we don't even know what the pull forward was. We don't know how many of our chips came from that. How do you evaluate a company if they don't even understand the environment that they're currently sitting in, let alone what's to come further down the road?
Right, and this was something we actually picked up on in the last reporting season. I won't get into which companies, but we saw two companies involved in the same thing, and one said there had been pull forward and the other one said there hadn't been. And so we took that as a sign that, perhaps not all the companies even understood the dynamics at play with their own revenues. So we've been keeping an eye on this kind of pull forward, a pause, postponement. It still seems to be all of the above, and we are seeing a number of companies that are, kind of fessing up and saying we're not sure. And I think that we're still in a discovery process on this. If you've had pull forward of demand, that's bad for earnings later on. And so, if you've had some pause and there's pent-up demand that could help you later on, it seems like this question is still unresolved, and it's going to be quite messy in coming quarters figuring this out.
What about for the consumer companies? Because you have someone like a Coca-Cola who's able to raise prices. You have Domino's that outperforms, and then you have Chipotle saying we're in trouble because consumers are value-oriented and they're not willing to pay as much. How do you distinguish whether that's actually the case or some of these companies are using the economic environment as an excuse?
So if you look at the financial companies, and again, we saw this last reporting season, also week one of this one, and even a couple last week, and they're like, the consumer's fine, all the stats are fine, look at delinquencies, look at spending, it's all fine. And that's great, but then you go and you look at the actual consumer companies, and I would say even some of the ones that had good stock price reactions and seem to be managing, pretty well through, they're still telling you the consumer is value seeking, that there's a little bit of caution in there, that there are problems at the low end. So I think that narrative is pretty consistent. It's just that some companies are managing to deal with it a bit better than others.
I guess part of the problem, though, is that a headline level doesn't show up because you still have AI. You still have these companies spending so much on capital expenditures. We're going to get a bunch more of that this week. Amazon, Microsoft, Apple, just to name a few. How important are those earnings to continue what we've seen of this record after record behavior?
I think it's a great question. And look, maybe I'm just paying attention to it less, but the AI comments aren't showing up. I kind of call it now Lori's beige book. We have 10 pages of quotes or whatever it is. And we're just not noticing the AI commentary quite as much. Partially that's because it all kind of sounds okay. But we did do a study a few weeks ago where we went back and we looked at prior reporting seasons. And when you start to see this critical number of companies, just a big surge in volume of the number of companies report, you often see earnings sentiment for the kind of top 10 AI-dominated names wane versus the rest of the market, which is just a way of saying, kind of that enthusiasm fades a little bit relative to the rest of the market, and that enthusiasm picks up a bit. Haven't really seen that this time, but that is something we're worried about, because if you sort of take some momentum out of those bigger cap names, it could hurt your returns in the broader S&P.
Just on the theme of enthusiasm, before we let you go, Lori, a lot has been said about these highly shorted companies turning into meme stocks again, crypto trading around 120,000. For you, are these signs of exuberance to be concerned about? So
we watch Bitcoin prices pretty closely because there's been a decent correlation with the S&P, and I know it's been making new highs, but we had seen a brief stall there around the same time we saw a stall in the momentum trade. And we've been watching, some of the momentum factors. There are all these third-party versions of this out there, but generally one that we've looked at has coincided with weakness in the S&P when it peaks out, and that particular momentum factor looks like it's peaked. And since 2024, it's given you a lead time of anywhere from a few days to 2 weeks that the broader S&P is ready for a breather. So that's something that's got us concerned. And look, I would just say on the meme stocks, I'm certainly not an expert on this, but I am an old small cap strategist. Right. And one way that we tend to watch the low quality trade in small cap is looking at highly shorted names versus lowly shorted names. We have that in our weekly. And so we took a look at that late last week when we were writing this week's weekly, and you've seen the high short interest factor outperforming for a bit. It pales in comparison to what we saw back in early 2021. So, yes, we see a lot of signs of froth, but if you're just looking at that particular chart, maybe there's a little bit more to go.
Yeah, and no one has those stimulus checks anymore, so maybe that kneecaps just how much further this can go.
That's true.
Lori, thank you so much for joining. Lori Calvasina of Lori's Beige Book, also of RBC Capital Markets. Thank you so much for joining us this morning. All right, let's now get you some other top stories that are trending on the terminal this morning. Sales of Heineken beer saw a decline in the last quarter. Despite the summer heat wave, beer volumes fell due to retailer disputes across Europe over price increases. Shares of the beer maker posted their biggest intraday drop in more than 3 months. Thai and Cambodian leaders are in Malaysia discussing how to end their deadliest border conflict in more than a decade. The Malaysian Prime Minister is facilitating the dialogue, with Washington and Beijing dispatching envoys. Clashes erupted last week. At least 35 people have been killed and more than 150,000 civilians displaced. And China has just announced that it will start handing out childcare subsidies in its latest push to boost birth rates. The official Xinhua news agency reporting that Beijing will spend around $500 a year per child under the age of 3. China has been seeing worrying drop in birth rates in recent years. Coming up, a U.S.-EU trade deal. We're going to bring you the details. That comes up next. This is Bloomberg.
We've reached a deal. It's a good deal for everybody, I believe. And I think you were saying this is probably the biggest deal ever reached in any capacity, trade or beyond trade.
It is.
It's a giant deal with lots of countries.
President Trump speaking from Turnberry, Scotland, where his golf course is, meeting with Ursula von der Leyen, reaching a trade deal with the EU. We're joined now by Bloomberg's Brendan Murray, who leads our global trade coverage. Brendan, what details do we understand about this agreement?
Well, when they say it is a big deal, it is in economic terms. It's a 1.7 trillion euro trading relationship. So in that sense, it is a big deal. What we don't know yet is we're short on details. We know that there are some purchase agreements of $750 billion worth of American energy exports to the EU. There's a pledge for $600 billion worth of investments the European Union is going to make into the U.S. that they weren't already planning to. And there are some sectoral tariff issues that still are unresolved. The auto tariff was dealt with at 15%, as was the pharmaceutical tariff rate. Those are separate from the across-the-board reciprocal tariffs. And then the steel and aluminum tariffs are still at 50% and still need some negotiations to sort those out. So they announced a broad framework of a deal, but there are still some things these negotiators are going to have to sort out before they can get everything on paper and we can see the fine print.
At least some relaxation that they're not just getting a letter to set the terms before August 1st. But Brendan, the next deadline after this Friday is going to be one with China, and their Chinese and U.S. officials are meeting in Stockholm. What's the outlook for an agreement between them?
Well, it's pretty much baked in that they're going to extend the talks with China for another, say, 90 days or so, so well into November. They'll continue this dialogue. Treasury Secretary Scott Bessent has said, we hope we've reset the relationship. We've de-escalated our tariffs against each other, and we're now working toward progress rather than de-escalation. So this is the first of those meetings. It's the third in a series, but it's the first one where they're coming to the table, not escalating the trade war against each other. And there's some big issues that China wants to see the 20% fentanyl tariff go away. That is, unlikely to be given up by the U.S. side at this stage. That's important leverage that the U.S. wants to keep. So there are some issues about export controls that they may try to address, at least get on the table, and then bring up at future negotiations. That Secretary Bessent says he wants this to be sort of a routine conversation that they're having with their Chinese counterparts.
Brendan, I think one of the net takeaways of all of this is that it's going to be some time until you get a weekend. Thank you so much for your reporting. That is Bloomberg's Brendan Murray. Now, meanwhile, President Trump's deadline for his self-imposed reciprocal tariff rates for other countries is on Friday. But before that, the day before, on Thursday, there are oral arguments scheduled in the president's appeal against one of the earlier rulings against his tariff policy and using IEEPA, the Emergency Powers Act, to enact them. For more detail, let's bring in Bloomberg DC breaking news editor Kasia Klimanshinska. Kasia, what could we expect from these court oral arguments that are set to start on Thursday?
Good morning, Dania. As you mentioned, President Trump is pretty much going around the world handing out those new tariff levels to all the countries. The EU yesterday secured a 15% rate. Japan also got 15%, but there are countries that got 20% or even 50%. And courts are looking into that's even legal to begin with, whether President Trump can use the International Emergency Economic Powers Act to impose such high tariffs. We will have a meeting on Thursday. On Thursday, a panel will meet. All the 11 judges on the panel will meet to listen to arguments in favor and against those actions from President Trump. So there is more uncertainty, right? There is not only the uncertainty around what tariff level some of those countries will get, but also whether those tariffs will even stick, whether they are ultimately legal.
Kasia, the other thing that maybe even this administration is going to be paying more attention to comes the day before when we have a Fed decision. Where do we stand between concerns of independence for the Fed and what we're likely to hear from Trump and what inevitably I'm sure will be a pause from the Fed?
Indeed. So on Tuesday and Wednesday, the Federal Open Market Committee is meeting and they will decide on the level of interest rates. It's broadly expected that the Fed Chair Jerome Powell and his colleagues will not change interest rates. They will leave them unchanged. But of course, President Trump used every opportunity on Truth Social during pretty much all his public events. He urged Powell to cut interest rates, to lower them significantly, and he even met with Fed Chair Powell last week when Trump went and toured the Federal Reserve headquarters here in downtown D.C. Trump and Powell mainly discussed the costs of renovation, but we know that the two also talked about interest rates, and Trump, when talking to reporters later, again reiterated his call for lower interest rates. He said he thinks that the Fed will do the right thing.
Yeah, we'll see what kind of pressure that results in. I'm sure he will get plenty of questions from that in the presser. Kasia, thank you so much. Kasia Kleeman-Schienska. This also might be the first Fed decision since some time that we will have dissents. 2 dissents may be likely for a cut to come for this Fed decision. Now let's turn to tech. Tesla leading the Mag 7 higher. It announced a chips deal. Samsung will produce AI semis for the EV maker as part of a new multi-year pact. For more, let's bring in Bloomberg's Craig Trudell. Craig, what exactly are the details?
Yes, so this is something that Bloomberg scooped overnight, and that Elon Musk confirmed on X, that the company is going to buy quite a lot of money, quite a lot of chips in terms of value over the years, but also that in short order, Teslas will go from having a 4th generation chip in vehicles to a 5th and then a 6th. And so this is going to mean quite a bit of transition for Tesla in the next couple of years in terms of the computing system that underpins its driver assistance systems, autopilot and full self-driving. And this is all as Musk is trying to sort of tell a story about the company that, AI and self-driving technology is going to be what sort of distinguishes the car maker from its rivals as sales really, have been quite weak the last year plus.
Now, at the same time, Craig, it is an industry that is continuing to grapple with tariffs, despite the fact we have this new 15% rate. It seems that there is some relief from the European automakers, something like $5 billion of tariff reprieve. But we still had VW talking about Audi this morning, out with their outlook, saying they're still taking a big hit from tariffs. How are we seeing different automakers cope with the tariffs, and those that are able to and those that are not?
Yeah, we're seeing some real relief rallies. First, with the Japanese car makers last week, and I think there was a sort of market move in anticipation that the EU would be up next in terms of going from 27.5% for imported cars to 15%. And that is a big difference. That is quite a bit of relief for these companies. But this is still a matter of going from 11xing the tariff that you have to pay on imported cars from Japan and the EU to only 6x, right? And so this is still going to be quite costly for these companies. And we still, to the earlier conversation with Brendan, don't know to what extent they're going to have to agree to some investments in the U.S. To kind of make the Trump administration happy and sort of also sort of reinforce that he's he's sort of making good on his promises to drive more U.S. manufacturing. So we heard from Volkswagen last week that they expected to get a reprieve from tariffs in exchange for more investment in the U.S. So there may be more to come from, I would say, the German car makers in particular in that regard.
Craig, thank you very much. That is Bloomberg's Craig Trudell. By the way, some exclusive reporting from our reporters this morning on the EU deal, specifically that Macron just didn't want a bad trade deal, that Europe saw its position as weak and thought that it would be better to accept a bad deal than have no deal at all. You can read that one on your terminal or Bloomberg.com. Coming up, we're going to get you set up for your week ahead. It is packed. We're going to have data, earnings, a rate decision. We'll lay it all out for you. That's coming up next. This is your brief. I'm Danny Berger in New York. Let's get you set up for this week. It's a doozy. We're going to have a Fed rate decision that comes on Wednesday. Meta and Microsoft earnings, they also follow up that afternoon. And then there will be Apple and Amazon reports on Thursday. On Friday, we get the July jobs report, that along with President Trump's August 1st tariff deadline. Now, some individual movers this morning. Tesla, that is, leading the Mag 7 this morning. Samsung has agreed to make chips for the firm, a $16.5 billion multi-year deal. Meanwhile, Sarepta, those shares falling 1.5%. The FDA is now investigating the death of a child that received gene therapy. Chenery Energy, those shares are up 6%. U.S. energy stocks moving higher. President Trump has said that the EU has agreed to purchase $750 billion in American energy products. That as part of the U.S.-EU deal that will see a 15% tariff rate on the EU. And that's also seen the dollar strengthen this morning, the euro fall. We did get a deal for Europe, but maybe not the best case scenario for them. All right, that is it for your brief. Surveillance takes things from here. This is Bloomberg.